Are you struggling to understand your business numbers? Are you wanting to take your business to the next level? Well, each week here on the Local Small Business Coach podcast, we dive into your business to help you not only understand the business numbers that matter, but we will discuss how to use them to increase your profits. Hi, I'm Tammy, and I'm on a mission to help our badass local business owners take their business to the next level. So if you're a badass or a badass in the making, let's get this party started. Hey, badass business owners. Welcome back to the Local Small Business Coach podcast. Today is Thursday. That means we're talking about something to do with your numbers. And I want to revisit something we've talked about in the past. And I know I'm going to need to talk about this a few times just so that way everybody can be on the same page. Plus, we're getting new people all the time. So it's one of those lessons that are good to have over and over anyways. And one of the things that I always try to base things off of is when I get feedback from people multiple times in a week, it means I just need to revisit it. And so today we're going to revisit paying yourself and what that should look like. And I think part of what happens is people hear about it at first and then they start diving into the numbers and it gets a little bit more complicated. So we're just going to take a few minutes and we're just going to talk about this whole concept of paying yourself. All right. So here's the thing. One, we always want to make sure that you get paid. The whole reason you're busting your butt and working hard is so that you can earn a great paycheck, earn a great living based off of having the business. But you have to keep in mind two things. You're wearing multiple hats within your business. One hat that you're wearing is the doer, the person who's doing the service or providing the product or whatever the case may be. So one hat you wear and one way that you get paid is as a doer. And then you also get paid as an owner. So think of it this way. You're getting paid as an employee and you're getting paid as an owner. You need to also understand that you don't want to confuse that how you pay your taxes with how you're going to account for your pay when it comes to your profit and loss, because they're really two different things. Your accountant, when you go to pay your taxes, you're going to add the two pays together. So let's just say you pay yourself as an employee $1,000 and you pay yourself as an owner $1,000. At the end of the day, you're getting $2,000 out of that business that you're paying. The reason that we want to account for it as an employee is for a couple different reasons. One of the reasons is because you need to plan your business to know what your actual gross margin is. And your gross margin is your sales minus your cost of goods. Well, hidden in that cost of goods is any labor, any payroll associated with providing that product or service. Now, right now, I'm mainly talking to service-based providers, people that actually go out and do the work themselves. Window cleaners, handyman, plumbers, electricians, dog groomers, stuff like that. Okay. So what you want to do is, although we all think our value is high, what you want to do is you want to set a fair wage for what it is that you're doing. So let's just say you had to go out and hire someone to do the same thing. So let's just say that you're a handyman and you were going to hire someone else to come help you out. Would you be paying them $20 an hour, $25 an hour, $15 an hour? It really depends upon your area and community and everything else. So you want to set a wage for yourself that is common for what it is that you're doing. Obviously, plumbers and electricians, they're probably going to be a little bit higher because if you hire a plumber or electrician, a licensed one, you're going to be paying more for that. So it might vary for each person. So for you as a doer in the business, as an employee in that business, you want to set a wage. So you're going to say, okay, I'm going to pay myself a fair wage of $20 an hour. And then you're going to have to decide, how many hours a week are you paying yourself? Or you might be saying, I'm going to pay myself $500 a week. Whatever route you want to use, the main reason that we're doing that is we like that hourly wage because when we're trying to figure out what our cost of goods are, we need to be able to figure it out. So for example, if we charge somebody $1,000 to install a water heater, our cost of goods are going to be the water heater itself, the parts for the water heater, and the labor for the water heater. So in order to get a true gross margin of what it costs to install that water heater, we need to be able to say $500 for the water heater, $100 for the parts, and $150 in labor hours. we need to be able to know what all that is so we can come up with our actual true gross margin and what those gross margin dollars are. So at the end of the day, because remember, it's sales minus cost of goods minus expenses equals profit. And from that profit, you're going to split that into two categories. One is going to be three categories really. You're going to have retained earnings, the money you're going to leave in the business. You're going to have the money that you pull out to set aside for your taxes. And then you're going to have the third bucket, which is the owner's draw. So let's just say that you are paying yourself $500 a week as an employee, and at the end of the day, your profit at the end of the month was about $1,000, in which case you're going to say a third. Let's just say that's how you're doing it. You're going to put a third into retained earnings, a third into your taxes, and another third you're going to pay yourself. So you're going to have those checks that you wrote yourself for the $500, and then at the end of the month, you're going to take $333 as an owner's draw. So when you look at your total pay for the month, when it comes to taxes, they're going to add all of that up. Now, that doesn't mean you need to have a payroll system. It doesn't mean you need to set yourself up on payroll in your payroll system. If you have one, your tax person can tell you if it's the best thing for you or not. But what you want to do is you just want to count for your money in two different buckets. And that is mainly for, like I said, is for you to get true and accurate P&Ls. Because here's the thing, ultimately you're going to grow and expand your business. And in order for you to do that, you need to know that this is how much money I'm going to make when I hire that employee to replace me in that business. Because ultimately what you're going to do is you're going to pluck yourself out and pluck someone else back in, which is going to tell you what that gross margin never changes because you've been accounting for it all the time. What you're hoping for is that your owner's draw will go up because you're going to make more profit because you're able to add more people to the business, which will add more to your bottom line. And ultimately that should offset the owner's draw should be able to go up because now you're going to be able to make more profit by having additional people. Hopefully that is making sense. Okay. So you definitely want to pay yourself first. You want to make sure that you're making money because when I'm looking at people's profit and loss, it looks really deceiving because if someone's not paying themselves or accounting for them as an employee in the business, it looks like their business is making tons of money. But when you back out what they paid themselves for as a fair and living wage based off of the job, they're actually losing money. So some of you guys are looking at P&L, profit and loss statements that are very false and misleading because you're really not accounting that money you're taking out is as an employee, not as an owner. Because ultimately, if you go to sell your business or look at the true value of your business, you have to be able to replace you as a doer in the business because you can't assume that someone who wants to buy your business, for example, would want to do the work and the labor that you're doing. So, once again, you guys are business owners. You didn't do this to create a job for yourself. If all you're doing is taking whatever money is left over at the end of the day, that's as an employee, okay? As a business owner, what you want to do is you want to build this business to where you ultimately learn how to live off of the owner's draw. But the only way you can do that is by pulling yourself out as an employee down the road. So you're paying yourself first as an employee and then as an owner. So your first pay is set at average or, a typical wage for an employee that you would hire off the streets to do that same job in your business. And then your second check that you're going to get is going to be as the owner when you take whatever profits are left over after you do your retained earnings, you do your taxes, and then the money you take is your owner's draw. Once again, your accountant may put it together, that's fine. But on your P&L, have it separated out into two different categories because it's important that you understand what your true gross margin is. And like I said, I've been looking at these P&Ls and there's people that don't have any cost of goods at all. And they're not even including any of the chemicals that they may use. And some of you guys don't have high cost of goods because it's mainly all labor. Because the service, if you're a window washer, for example, 99% of your labor is going to be labor, the person actually doing the job. Whereas, you might have a few chemicals here and there, especially when you go buy a bunch, but those chemicals might last you for a month or two. I'm helping a carpet cleaning person right now, and guess what? his cost of goods for the actual chemicals kind of goes ups and downs every other month based off of when he buys it. That's totally normal. But what he needs to do is have his labor in there, because if anybody, let's say someone window washes and they get $200 to do the entire house, well, their chemicals might be very low. But they need to say that, hey, if I was to hire someone off the streets, I'd be paying them $15 an hour. They're at that house for 3 hours. So there's really $45 of labor hours that's in there as well. So the true gross margin is the sales minus the cost of goods. So in this case, it would be the $200 minus the labor of $45. Let's say the chemicals are nothing, so we're just not even going to count that. That means the gross margin dollars are $155. Then from those gross margin dollars will come off the expenses of the business. So it's not, I just don't want somebody to falsely think they're making $200 just because they don't have any cost of goods. No, you had the $45 you're going to pay yourself as an employee. Then you're going to start at the $155, take off any expenses the business might have, and then you get to keep the rest of that money after you do your retained earnings taxes and then paying yourself. So I'm going to keep saying this. I'll probably bring it up every few months because I want to make sure everybody understands what's the right way for you to pay yourself. So the first paycheck that you get is as an employee in your business, as a doer, if you will, under cost of goods. Now, don't forget, you have labor that falls into two buckets. Might as well hit this up since I'm on a roll. You have labor that falls into two buckets. Bucket one is as a doer, cost of goods. You cannot provide that service or product without that person because they have to assemble it, they have to put it together, they have to do it. That's a doer in the business. Anybody else that supports the business, whether they're ringing on a register, they're taking phone calls, they're doing the schedules, that's all expenses. That's expense labor. And that all goes under your expenses. So anything office related, phone call related, sales related, stuff like that behind the scenes, that's going to be expenses, and it's going to be under that category versus under the cost of goods. The cost of goods is the actual doing of that particular item. So sometimes you even yourself might be paid in two different buckets. And by the way, any payroll expenses that are tied to that, for those of you guys that actually use actual payroll services, your payroll taxes and your other payroll items all go under expenses. So the only thing that you're really capturing on the top half is going to be the actual which wage you're paying them to do it. Now, some people might want to, if you're really going crazy and want to know your true cost of goods, yeah, you could probably look at, if you pay someone $15, but you know that there's an additional $2 every single time for whatever reasons, that's more from a quoting standpoint that you can keep in mind. But actually on the P&L, it's just going to be whatever you pay them an hour, $15 an hour, $20 an hour, whatever that is. Didn't mean to make that complicated, but sometimes people ask me that. But most of you, that's not right now. My main goal right now is just to get you thinking about your business numbers and to get you looking at it differently than what you've had to before. And I really want you pulling up those P&Ls, and I want you pulling them out of the system that you're using, having your accountant give them to you, and then making those changes. Your accountant can make those changes. If somebody else handles your bookkeeping, all you have to do is talk to them and say, look, I want to capture this payroll stuff under my cost of goods. I want to make sure that this payroll piece is split to where it's captured here, and this payroll piece is captured under expenses. They might give you every reason under some, but at the end of the day, when they do your taxes, they can put those back together. But you want to be able to look at it from a business owner and know what's going on in your business. So you need to make sure that you're capturing it in the right buckets. So once again, you're going to have two different types of payroll. One is as the doer in the business, as an employee role, and then you're going to have the second one, which is the owner's draw at the end of the day. The only time that you're really 100% owner's draw is when, for the most part, you're just the conductor of the business. You're not really doing much inside of it, but you're just conducting and flowing and getting everybody going their different directions. Then yeah, you're not getting paid as an employee, even though you may do some of those items. You're not really an employee. You're just kind of, you jump in and help as you can, but you're not really an employee per se. So when you kind of step out of that role, you won't be doing that. But for most of you, you're playing a huge role within that in the business. So you want to capture that payroll. And if you have any questions on this or you need to bounce it off of me, like I said, you can reach out anytime. Just shoot me an email to Tammy@localsmallbusinesscoach.com, Tammy@localsmallbusinesscoach.com. It's also in the show notes. Feel free to reach out to me. I'll be glad to answer your questions. I'm not a CPA. I'm not an accountant. So yes, you want to talk with them and everything else. But you know what? If you go in armed with what it is that you're looking for, they should be able to help you out. Okay. I'm not trying to start some war with different people. I think it's just more of, in order for you to be able to run your business, you really need to understand your business numbers. And if your ultimate goal is to grow that business and scale that business, you're going to have employees and you are going to have to pull out of being the primary person doing the doing. So you need to capture all of that so you can make sure that your gross margin is set right, your profits are set right. So this way the business can one of the worst mistakes that people make is they bring on people before they even know the impact of having that person join their team. Your best bet is to fix your profits and understand your profits first before you go hiring people, because there's a lot of times where people hire somebody and then months later they realize they're making no money, they're losing money, and it's because they never understood the role of how that was going to play into the entire business. So it's important that you really understand this piece. All right, with that, I'm going to get out of here. And oh, by the way, if you do want to learn more about your numbers and diving into it, don't forget there is the course out there for the Know Your Numbers course. It's in the show notes. It'll show you the link on how to get there. All you got to do is go to knowyourbusinessnumberscourse.com, hit the show notes, whatever the case may be. What we dive into your P&L, we dive into understanding gross margin better. We dive into different reports like your break even. We show you how to do that, your balance sheet, all kinds of stuff. There's all kinds of things in there. And then as I get different requests, I'll probably toss it in there as well. But my main goal is to really help you guys understand your business numbers. You make better decisions, and guess what? You start to make more money because you understand the flow of those numbers and how they all impact each other. And that's always been what this has been about. All right, with that, I'm going to get out of here and I will talk to you on the next episode. Have a great weekend, or whenever you're listening to this, have an amazing week. Bye. Hey, before you go, if you're looking to learn more about your business numbers, then check out the Know Your Business Numbers course, where we take a deeper dive into the key numbers, the calculations, the reports that will help you take your business to the next level. My mission is to help everyone love their business numbers. Yes, even including those of you that hate math. So much profit is hidden inside of your business numbers, and I want you to create some awesome profits. So check out the link in the show notes or head on over to the knowyourbusinessnumberscourse.com. Once again, knowyourbusinessnumberscourse.com. Come join me. Let's go ahead and work on building your profits.